Hey everyone, stick with us versus herd. If it's your first time here, let the content, hit subscribe. If you want to get notifications from when we go live, tap the bell. We go live Monday through Friday, 30 minutes before market open. And if you want to join the UVH fam, our community, link is below in the description to our Discord and our options trading group on Facebook. If you're here right now, say what up. Right now, S&Ps are down 81, Dow's down 900, and Nasdaq is down 155. It's like, oh man. All right, so we're gonna have to we're obviously going to have to fight through some things. We had a down day yesterday. We're down again today due to what they're saying. What are they saying here? They're saying that their concern now is about a second wave. Now, I think what happened is, we ran really hard. States are back open, and now they're saying there's a second wave, Texas and California, hospitalizations ramping up. Texas reported 3 consecutive days of record-breaking COVID-19 hospitalizations. 9 California counties are reporting a spike in new coronavirus cases or hospitalizations of confirmed cases. Friendly monetary policy from the Federal Reserve cannot offset a severe COVID second wave. So, it is what it is. It is what it is, but should we be scared? No. Should we be, if you look at it, if you look at the S&Ps here, I don't want it to happen, but it could. It's not even at the weekly low yet. The weekly low right now is 30.87. We're at 31.04. So, we gave back a few days worth of gains. Now, where this can kind of unravel, get pretty serious, obviously, is if, we drop another 30% from here. But giving up a few days worth of gains, to give you some perspective, we were up from 30.87 up to 32.31, and now we're back down at 3100. It's not like, two-sided action. It's going to happen. It's going to happen, and any trade that you put on, in this day and age, you have to be ready that trade could potentially go to zero. That trade could go to zero. Sure, people that are short right now could be having a great day, but what kind of pain did they get to get there? I was long, right? I still am long. Normally I hedge with some VXX calls. Unfortunately, I didn't hedge with some VXX calls, And it is what it is. But the good news is through all this right now is, there's movement in the market. So that means we're going to be able to fight back. We're going to be able to trade our way back. If you're winning position today, be careful. Don't get too cocky. They're going to come for you too. Like you've seen in the last few weeks, they've beat bears up terribly. What's going on? Micah, Carl, Jeff, Keith, Jack, Hank, Reggie, Daniel, Lion, Ditya, Daniel Ring. So, I think that this was obviously pullback was going to happen. I guess we didn't think that it was going to be all like in one day. But hey, here we are. It doesn't really matter what we think, and they're going to catch you off guard, and that's just what the market does. The market is going to catch you off guard, and that's what's happening here. Why would they give you a warning like, hey, we're going to drop it tomorrow so you can exit your positions? No, that's not what the market wants. The market wants to take your money. So they're going to take a little bit from me. They took a little bit from me yesterday. I didn't close any positions yesterday, but this is another example of why you don't want to go all in. Like, this is why you don't go all in, right? This is the reason why you don't go all in with your account. No YOLO. You got to have money to fight back. You got to be able to take your licks and move on, and it is what it is. We're going to be down and open. I'm going to be down and open. I was losing yesterday, but I didn't close anything out. Let me pull up my P&L up here. See, I mean, I've had a great 2 weeks, right? And now we're struggling a little bit. And the one thing that I didn't do is, like I normally do, is hedge with some VXX calls. I didn't hedge with VXX calls. My bad. And a lot of this, like I said yesterday, a lot of this could be avoided. NKLA, I was profitable, didn't take profits. Boeing, I was profitable, didn't take profits, right? So I did this to myself. I did it to myself. So who's to blame here? The market is not to blame. Yes, the market fell, right? It went against my positions, went against my plan, but who didn't stick to the plan in the first place? I didn't stick to the plan in the first place. I should have took profits. I mean, a lot of this stuff I have time on. Like Disney, we have time. Disney is another one. I was up over 40% twice, didn't take the profits because I'm like, oh yeah, I got time. Maybe it'll run up a little bit. Maybe we'll hit 130. So, let this be an example. Like when you don't stick to the plan, you get hurt. And you got to move with the market. You can't just keep letting things run. And that's what I was doing, with Disney, because the market was running so hot. Now we have some pullback. Disney's going to hurt. I was only down $40 yesterday. Disney, right now is at 116. We're going to be down. We're going to be down on this position. I was down 10% on it yesterday. We're going to be down 50% on Disney. I mean, thankfully we have time. The only thing that's probably going to be doing well for me this morning is Grubhub, right? Grubhub, I'm going to be doing okay. They had the buyout from Takeaway. What's it called? It's like, what do they call their? It's like, I don't even like. Just Eat Takeaway. JustEatTakeaway.com. Just Eat Takeaway. European company. They're going to be buying Grubhub. $75 a share. Valued at $7.3 billion. So, implied value of $75 a share. Transaction is going to be $7.3 billion. So, you gotta kind of roll with it, and when the market shifts, you don't stick to the plan. I mean, this is exactly what happens. Chad down 1.3K per pre-market. Yeah, I mean it's not good, but the question is, what are you gonna do with it? Yes, this market, this portfolio, it's trash. I didn't stick to my plan. It's trashed, right? The only saving grace is we have time, so I don't necessarily have to cash out. But in the meantime, what am I going to do? What am I going to do today? And that is what we're going to have to try to figure out. There's movement, hopefully. My plan here going into this, and this is going to be my plan right now. My plan going into this right now is I'm going to be still. What happens to a lot of people when we have a huge gap up or gap down? They panic, and that's a good thing to. I mean that's a sign that you're trading way too large for yourself. You're going in too big, and your timing is not good. Let's say you have stuff expiring tomorrow. Of course you're gonna panic. If you got 50% of your account on the line expiring tomorrow, yeah, you're gonna panic. But for me, I don't have to make any crazy adjustments. I don't have to do anything except wait at open and then kind of pick up the pieces afterwards. So I'm going to be looking for some day trades here. But I'm going to wait for the dust to settle. Maybe it's going to take an hour. Maybe it's going to take 2 hours. Maybe it'll even take 3 hours. I don't know. Or maybe they're just going to lay in. And if I feel like they're just not going to let up, then I'm just going to day trade some puts and hang on. I'm just kind of a little bit at a time, and I'm not going to try to make back all my money at one time. I'm not going to try to make back all my money at one time. It's just not going to happen. It's not going to happen. So, I could have saved myself probably $1,000 taking profits, probably $2,000 taking profits, but I didn't take profits. And now we're going to have to play defensive. And that's the thing. When the market just seems to rip up so easily, and you're in a winning position, you get a little bit too comfortable, and I think that's what happened. We were getting a little too comfortable, They were ripping the market up. We didn't have to do anything, just kind of buy and wait. And now you're going to have to make some moves. But good news is we've been through worse. We've been through the coronavirus crash. And like I said, you know, we're just going back to where we started the week. We're not like out of control, like way down. You know, like if you look at SPY, I mean, sure it's at 310, but I mean it's going to open up here. It's not going to, like, it doesn't do anything for the 1 year chart. You're not going to really even notice the difference. Now, if we go down to 280, then you're going to notice. But a pullback from 320 to 310, I mean, it just sucks it happens in one day, and most of the move happens overnight, so that way your options you can't get out. What I should have done was short some S&P futures. I didn't. I kind of like, okay, we'll just see where it happens, because the last few rip downs have been bought pretty aggressively, you know, back down in here when we fell from 295 down to 272, came back up, you know, ripped back up to 295 within a couple of days. So for me, I'm going to wait. I'm going to see what happens. I'm going to try to play this smart. I'm not going to panic. You know, and if you're panicking, you got to focus on reducing your size. And that's what it is. How long is this downtrend going to be? I mean, who knows? I mean, we could, you know, thankfully it's come back down to this 10 area. I think it could bounce here, right? Or, I mean, it really depends on how serious to take this second wave news. Like the coronavirus news, who knows? I mean, jobs were a little bit better than expected. But I mean, what was it? What was the weekly unemployment? Was it 1 point? Yeah, here we go. Unemployment claims totaled 1.5 million last week compared to 1.6 million the previous week. 355,000 fewer than the previous week. So, continuing claims of those collecting benefits for at least 2 weeks declined to 20.9 million. So, I think what's going to... Gold is not a buy yet. I think what is interesting now, obviously the numbers are spiking for coronavirus because things are opening back up. And that, I think that's to be expected. Now, to call it a second wave, I mean, I think that's a little bit of a stretch. You know, sure, I think you could be concerned about a second wave hitting, but is it really a second wave if we just never encountered anybody that had coronavirus because we were locked down? I mean, the virus was here. It's going to keep us locked in our house forever. I mean, I'm sure the protests and riots didn't help, but like, what's going on? Like, they knew this was going to happen. Market knew this was going to happen. However, the market wasn't pricing it in. Market was just ripping up because that's what it was doing. Probably just squeezing a bunch of shorts out. So now it's trying to come back down to fair value. So I think that we could be I definitely think that we could be range bound for a while. You know, Daniel Salyers, how's it going? If you're just joining to say what up, hit the like button. Definitely appreciate it. So, I mean, if you're in calls for anything right now, it doesn't matter if Roku, Amir, anything, you're gonna be in trouble today. You're gonna be in trouble today. I mean, anyone going long right now. I mean, literally everything on my watch list is down except for the VIX. What's VXX is 34. Tesla is not as at 988. Apple, I mean, let's take gap down. Look at Apple. I'm just not going to take this too seriously until we have to. What I'm just going to do is just move with the market right now and pivot, right? Like, what do you think of the banks? No play. I mean, I think the banks are coming back into buy range. You know, looking at got the banks right here. JPM sub 100. I mean, that's good. It's coming back down. Things are coming back down to the support level, and I think that, you know, I'm talking about long-term stocks. I mean, I don't know what kind of bounce back we're going to get right now. We kind of have to wait and see, because if they really rally this coronavirus news and they really ramp it back up, I mean, the market's not going to go back up. You know. So, I mean, I think there's great opportunity here. There's going to be implied volatility expansion. So you're going to be able to sell some more premium, like Alex is saying. So what's target's down at 117. So I think that this down move, I think overall is going to be good. Sure, we're always concentrating on the immediate pain, but remember 2 weeks ago, guys. Remember when I said like lost $1,000 or 1,500? I said that I was going to make that back fivefold. I did. So when you're gonna have pain in your portfolio, I know that when I have a loss like this in my portfolio, that I'm going to become a better trader, become smarter for this market, and make better decisions to not only protect myself, but also put myself into a winning position. Like when I start losing like this, yesterday I was down, today I'm going to be down. What does that mean? That means you have to change something. If you keep what a lot of people are doing is they're going to keep buying calls, and maybe it will work out. But if you keep doing the same thing over and over and not reevaluating your strategy, you may have the right idea, but the wrong option strategy, and it's going to cost you money in this market. So when I have a couple of losing days in a row, 2 losing days, that's it for me. I reevaluate. What am I doing right? What am I doing wrong? What's going on? What can I do better? How am I going to get out of this hole? How am I going to climb back out? And you can climb out of it, but what a lot of people do is they take monetary loss and they get emotional about it, and probably because they're trading too big, right? They take monetary loss and it's painful, sure, but like for me this morning, talking it out with my wife, I was telling her, like, yeah, I'm going to be down probably like $1,000 or so, maybe more. We'll see what happens at open here, right? And I didn't feel anything. I felt nothing. And I think that's just comes with training. I'm not saying don't care about money, but in the market, money is a tool. It's something that you use to make more money. It's what you need. Capital preservation, that whole thing is what you need to do to be successful in the market. And being down a lot of money, and to most, a lot of people, a lot of traders, $1,000, $2,000, not a lot of money, right? But then there's people that are like, man, you lost $1,000 in a day, $2,000 a day. That's like how many hours of work for me? I don't know. So the thing is, when the money that you have in the market, time does not equal money, right? We're trained at our jobs. We're trained from a young child. More time equals more money, but that's not the case for the stock market. That is not the case for the stock market, right? Unless you're compounding interest in Warren Buffett approach, right? But we're not talking about. We're trading options. We're not trading stocks. We're not investing in stocks. Trading options, right? So time does not equal money. Money is just a tool that you use to either make more money or lose more money with, right? It doesn't do anything. It just exchanges one hand to the other, or it comes into your account, and that's all it is. And you kind of have to be detached from that, because it's not about how much you can't reflect like, oh yeah, I lost a mortgage payment today, or I lost this. It's like, no, if that's your mentality, the money in your account then is it's not safe. You can't, if you're trading with money that you need, you're going to make bad decisions. Okay? So trade with money that you don't need. Put it away in an account. Open up a portfolio with money that you don't need. Like you don't try to put the mortgage payment into your portfolio and try to expand on it, right? You don't do that. Like you don't do that. Like you don't take money from your kids' college savings account and try to fund your options trading goals. You don't do that. You don't, because you're going to make bad decisions. But if it's your money on the side that if you lost it all today, it wouldn't impact your life in any other way outside of trading, then you're gonna make better decisions. I can sit on it, right? Well, you only lose money if you bag hold. Sometimes a bad trade shows you a good way. Yeah, sometimes I take a little bit of heat, and we bounce back, and that's what we do. As a trader, I think especially like on YouTube, Twitter, there's an unrealistic goal that people say like, oh yeah, we don't lose. We don't lose. If you're on YouTube, you can't lose. If you're on Twitter, you can't lose. I never show my losses. People on Facebook, they never show losses. Yesterday I posted my losses. People don't post their losses. It's not realistic. What's realistic is what we're doing here. What's realistic is, we're going to be down a few stacks. But the question is, and that's going to happen to everybody. It doesn't matter what side you're on, whether you're long or short. Eventually, you're going to have a red day. Eventually, you're going to have a really red day, right? The question is not about when you're going to have it. The question is what you're going to do after that. Are you going to quit? Are you going to give up? Or are you going to bounce back? Are you going to fight your way through this? And that's the only reason why I'm still here today is because I fight through the pain, fight through it, come back green. Now, the chances of me coming back green today are not probable, right? It's not probable. I mean, it could happen. Could happen. We've seen some crazy things in the market where Dow's down 800 points and closes up 800 points, 1,600 point move, 2,000 point move in the Dow. We've seen that happen in the last few months. So anything is possible. But to be realistic when you're trading, you need to be realistic. And for me to say, hey, I'm going to be green today is not realistic. All I can do is start shaving off, and keep pushing. And that's all that I can do. Buy the good stocks, short the crap on bounces. Yeah, I mean, like a lot of people have done this to themselves. Like you guys, not you guys specifically, but people were buying Hertz. I mean, why would you buy Hertz heading into bankruptcy protection? You guys know and this is just a lot of people's mentality is, hey, I'm just going to buy something low and hope that it goes up. I don't know anything about the company. I don't know anything about anything. All I know is that this stock is low, and I know that's a brand name. Hertz is a brand name. I think it's gonna go up. But what people fail to realize is when companies go into bankruptcy, shareholders lose everything. There's no such thing. Like it's gone. Your money's gone. If you had shares in there, if you had shares at 16, you're getting wiped out. You're getting wiped out in bankruptcy protection. So anybody throwing money ahead of time into bankruptcy protection is just throwing money away. Right? So if there's anything, if you still believe, if you still believe in Hertz and you still want to invest in it, you trade it, you buy in when it comes out of bankruptcy or when it gets through that. After the shareholders are liquidated, if they issue new shares or if they're still public on the market, that kind of thing. They might not even be public on the market, but you don't want to hold shares through bankruptcy because you're going to go to zero. You're going to zero. It's not maybe. You're going to zero. Thanks for taking the hits, and they can continue to keep grinding the group. I mean, the thing is, guys, even if we didn't do this publicly like we're doing right now, Alex, I would still be in the same position on my portfolio because I'd probably still be making the same decision. So this is just the realistic version. People don't show their losses. People need to show their losses. Just be accountable. We know you lose. We know you're going to lose. We know you lose. You have losing days. We all do. Everybody does. Sure, I had a really great run with green days. And people are like, oh, well, he doesn't post any losses. Here we go. Here we go. The goal is not to have losses, right? And when you've been trading options for a few years, I mean, you just kind of find a way to mitigate those. And yes, I took some hits yesterday, but I took $0 in realized losses. Now today, do I want to realize some of those, pivot? I don't know yet. That's what I got to figure out. Trade halt today? I don't know. I don't think it's gonna halt. I mean, I've been holding week negative. Next following week, made it back and came back green. The daily, weekly, now that when you have bad months, that's uncalled for. Yeah, I mean, if you're going through some stuff right now and mentally, if you're not in a good place to trade, don't trade. Mentally, you have to be here, emotionally, physically. If you have a bad attitude, that's gonna reflect your trading. If you have a bad attitude, if you are pissed off and girlfriend cheated on you, whatever happened, just don't trade. You don't have to do anything. You don't have to do anything. But right now it's looking like it's trying to bounce up a little bit. 825. We got about 5 minutes until market open. So job number came back a little bit better than expected. Sorry for the rants, guys. But other than that, we're gonna kind of keep watch. Right now, Amazon, it ripped up. There was a lot of upgrades this week. Boeing is going to be down 180. I think 40% of our portfolio should be in safe plays and metals related. Yeah, I mean, the thing is, most people don't want to be patient. When it comes to the market, they want to be paid right now. They want it right now. But you need to be patient when it comes to the market. Man, it's starting to ramp. It's trying to ramp up right now. Market's trying to ramp up a little bit. See what happens. I mean, this dip is major, but I think it's mostly impacting like Boeing. Man, Boeing just took an axe. Down 50 points in 2 days. Whew. UAL. It's down. Yeah, I think anything travel. See what Peloton's doing. Peloton's down. Lululemon. So Lululemon and Adobe, I believe. Today's Thursday, right? Okay, Thursday. Sorry. I don't even know what date it is. Today's Thursday. Adobe, Lululemon earnings today. So just keep that in mind. Yo, Eric, what's going on? If you're just joining, say what up. Kid in the background. my kids get a little wild. You cannot contain them. So Adobe, Lulu, they have earnings after market close today. So might be looking for a trade in there as well. This mic picks up a lot of stuff. Try to move it closer to my face so that way there's not much echo. I'm playing with the sound, and I'm trying not to invest a lot of money in soundproofing this place. I bought VIX pre-market and I'm regretting it. Yeah, you just gotta, like, when the market is like this and you're not in a winning position, you just kind of need to move a little bit slow and just kind of see what happens. I like to buy some stocks in the pre-market. Usually the prices are amazing. Yeah, it depends on liquidity. If you're getting a good price, it really depends. I mean, is this going to bounce back? I mean, I don't know. Hopefully, but right now, implied volatility was dropping. Now implied volatility is going to be way up. Expected move is going to be a little bit higher. So it's going to be interesting here. We open in about 2 minutes. So Lululemon. I mean, if you guys don't think we deserve pullback, I mean, just look at charts. I mean, it's going crazy. like these stocks are literally going crazy. So right now it's at 314. So even though Lululemon's dropped down to 314, I mean, it's still in the range that it's been in. Adobe. Let me just make sure. Adobe. Okay, they still have. I just want to double check some of the earnings date. Sometimes they change them. So Adobe's back at 398. I mean, it's just right here. So for me, on like a 1 year chart perspective, not scared. It's not like Adobe went from 400 down to 350, or Apple went from it's at 348 right now. Wow, big deal. You know what I mean? I think that we just need to be mindful. I mean, if you're holding Boeing like I am, you're probably effed. So that's the only thing that I'm probably going to be in trouble with is Boeing and Disney. Boeing and Disney. What's DKNG doing? I am long. Ooh, DKNG took a hit. So let's see. There's gonna be panic. So we're gonna be taking some hits today. So we'll see what happens here. DKNG's dumping. But what are we gonna do to fight back? What are we gonna do? I'm waiting for this pullback for a long time. All right, so things are obviously dropping here. S&P is down 80, Dow's down 851, Nasdaq down 162. So we're gonna have to kind of wait to see where things settled in at here. They're just kind of chilling. Let's see what it do. You know, I'm not gonna close out just randomly. It looks like I'm down. Yeah, it looks like I'm down about 1,000 right now on the day. But not too concerned. We've been through worse. And we'll get back on top of it. But right now I'm just going to observe the price action. So I'm not in a winning position. I have nothing to close out really. You know, Grubhub is bounced back, but it's looking a little weird here. Grubhub was kind of went from 66 down to 62. So let's kind of see what happens with Grubhub. You know, Grubhub, I've already made my money from selling the calls, the short calls. So I bought back short calls and I've made almost $400 on the debit spread, just selling, you know, shorting more short calls, buying them back, and you just kind of rinse and repeat since I've had this. I've been holding the 65 calls, so I have the 65 calls expiring next week, but I've been holding for a month. But what I've been doing is I've been creating a debit spread, taking off the debit credit, taking the debit spread, taking off the debit spread, and mainly just shorting more calls, buying them back, shorting more calls, buying them back, shorting more calls, buying them back is really what I've been doing there. But I mean, this could be massive. I mean, I don't think I'm not because we've only dipped a little bit, and the based on the run that we've been having. I mean, I'm not scared. But that also comes from a confidence. I have confidence in my ability to be able to get back on top. I know, I mean, I've done it many times. I've come from losing positions back into winning. I mean, that's just confidence that you need to build up over time. If you've never been there, if you just started trading and this is your first real losing day, you don't have that confidence yet. So it's going to take some time. You'll get there. Boeing's pop up. Man, Boeing's down 20. Why did I not buy a put yesterday? Why did I not buy like one single put? Why did I not buy just one single put to protect myself? And that's why you need some protection. That's why you could have got VXX calls. VXX calls. Let's see what VXX calls are going for right now. Yeah, this week 200%. I would probably bought the monthlies. These are only up 55%. Probably wouldn't have saved me, but it would have softened the blow. It's about softening the blow. So we just got to be patient. Kind of see what happens. So yeah, I'm going to be looking for some put spreads. I'm going to kind of see what happens when the dust settles. I'm not going to try to change because a lot of people, what happens when there's huge gap downs or huge gap ups, people panic. They just throw money away. They close positions. They're like, oh, all I had to do was nothing. So for right now, because I'm not in a winning position, I have time. I'm just going to chill. I'm just going to see what happens. We're going to relax, see what happens. There's no need to do anything, just to wait. Just wait. And we're making some money, we're making some money back right now. I mean, not like a ton, but it's coming back in. I mean, we'll see what happens. We will see. But Tesla's trying to move back up. What's Apple doing right now? Apple's just chilling. And they really scared everybody with the coronavirus news. It's been quiet. It's been quiet. And they're like, you know what? It's Thursday. Too many protests and riots. Let's drop the second wave on them. Like let's drop the second wave. Cloud companies are holding. Yeah, I mean, I think let's see what Datadog's trying to ramp up. Yeah, I mean, I think Adobe's down a little bit. Look at that. DocuSign's green. Corona ready. Coronavirus stocks. Coronavirus safe havens, ramping Zoom and Docu. So looking for, I'll probably most likely be looking for a trade in there. They really gapped down DocuSign and ramped it up hard. Whew. Look at that. Tesla's trying to fight a little bit. Maybe look for sell some premium in Tesla. I've been doing really well selling premium in Tesla. The last 2 weeks I'm up about 1,500 or so, $2,000 or so, just selling premium in Tesla. So I might be looking to do that. That's been a winning situation for me, is selling some premium. But yeah, right now the market's just chilling. The market's digesting. So, DocuSign, Zoom, you kind of have to go back to what you were doing when the coronavirus was coming in heavy. And I focused on Zoom and DocuSign and did really, really well. And that's kind of how you do. For me, like if I'm losing right now on Boeing, I'm not going to go just right back in Boeing. I'm going to rotate the stock out. I'm going to go and trade something else like Zoom or DocuSign. Wonder what Costco's doing. Costco ramped up. They're buying the Target dip. Walmart's green. TLT, and this could have been a good sign here. TLT, in the last few days has ramped up from 153 area, 155 up. It's been moving up. So we're gonna have to keep better track of TLT because this could definitely have been a sign that the market was gonna drop soon, and here we are. TLT ramping up like that, not good. So there's indicators in the market that said like a drop was going to come. The question is, are you paying attention? Are you just blinded by greed, or are you going to be paying attention to what the market is doing? We're doing bad, but there is a little green here. There is a little green here. So we'll see what happens. I don't know. I'm just gonna be patient. I'm gonna sit. I'm gonna wait. No, you could sell credit spreads, Jesse. You could sell credit spreads. Like if you go to Tesla right now and you want to sell some premium, let's say you want to do like July, or let's just say next week. Let's say you want to sell. You could sell. You could put on a put spread. This would cost about $1,000. You can do a little something tighter. This will cost $353. You want to be a little bit. You can kind of play with it. Max lost $285. So it's up to you how much risk you want to put in. Obviously if you want to go way out here, sell some premiums, you can do that. However, this is going to cost you $473 and you're only going to make $30, so it might not be worth it. So, you kind of have to play around with it to if you're looking to sell some premium. Now you could do it both sides. You could do like an iron condor situation for next week if you want. This will cost you $300, max profit $125. So you kind of just have to play around with what makes sense to you, what you think is going to be a good idea. So you can define your own risk essentially. It doesn't really matter what the cost. Like if you're selling spreads like this, it doesn't really matter what the cost of the stock is. It matters what the width of your spread is. So $5 wide strikes, right? And I'm getting $1. Look at this. I'm getting $1. I'm just gonna lock that. So I'll get $1.20 in credit. The maximum credit is $5, right? So if I'm getting $1.20, my max loss is going to be $380. So $5 or 500 minus 380 equals $1.20, 120. So that's how you do the math. You have to figure out what the width is right. Now, if you do like $10 wide on each side, $10 wide, right? We'll just bring it down to 280 just to make it simple for math. $10 wide, right? Max profit 280. However, we're at 1,200 max loss. So you kind of have to play around with the premiums. I mean, if you've never sold premium before, don't do it on Tesla. If you never sold premium before, do not do it on Tesla. That's all I have to say. So I'm going to chill. I'm going to wait to see what happens here. I'm just going to relax. We're going to see what happens. I'm going to pop off. You guys all have a great day. I'll be around. Stay safe. Stay green. It's us versus herd.